I'm Ellis Martin. Join me now for a conversation with Adam Smith, co-founder and vice president of business development for Oroco Resource Corp, a public mineral exploration company trading on the TSX Venture Exchange under the symbol OCO, and in the U.S. on the OTCQB market under the symbol ORRCF. Oroco is focused on the development of a large copper deposit in the Santo Tomas project in coastal northwest Mexico. Santo Tomas hosts a multi-billion-pound copper resource defined by historical drilling and currently being confirmed by ongoing exploration drilling by Oroco. Copper mineralization at Santo Tomas is located at surface and therefore potentially amenable to low-cost mining methods. It's very well located with respect to the infrastructure that's essential to a large mining operation, and Mexico is among the world's top mining jurisdictions, with laws and trade agreements that protect the rights of mining companies. Since commencing exploration and resource definition at Santo Tomas 3 years ago, Oroco has made a series of rapid advances, and the year ahead is rich with catalysts, such as a formal resource definition and economic evaluation, each of which carries the possibility of a company valuation re-rating. These milestones will be achieved against the backdrop of a positive forecast for the price of copper, possibly to historical highs, as a result of dramatic shifts in metal's importance to industrial and consumer markets. Today, Adam joins me from the Resourcing Tomorrow Mines and Money Conference in London, England. Adam, it's great to see you here at Mines and Money in London. We usually find ourselves somewhere in the world having a chat, and today it's in London.
I think this is fair to call Mines and Money one of the world's premier mining investment events. We tend to see each other here every few years, every couple of years. So yeah, great to see you. Great to be at Mines and Money and hear a lot of the inspirational talks being given at this conference.
There have been a fantastic amount of talks here. Robert Friedland spoke the other day, and I know Frank Giestra did as well. And Friedland, of course, is very big into copper. What have you gathered from this conference during the time that you've been here with regard to copper, which I think is underrepresented overall?
It is, but it is one of the big themes at the conference. It is quite clear in the talks, and you mentioned the talk with Frank Giestra and the Rio chairman, Dominic Barton, and it was clear in that talk and others that copper is king. There aren't a lot of copper companies represented here at the booths, and I think that's a function of the shortage of copper discoveries over the last decade, and the relatively few copper companies or few exploration companies there are with significant copper resources. And one of the themes that was discussed by Frank Giestra and Dominic Barton was the dichotomy. There's a dichotomy in the industry between the dearth of capital for junior mining companies on the equity side and the generally well and widely understood need for more metals. So we know the energy transition is going to be metal intensive. And at the same time, we also know that there's vast underinvestment in resources right now. As a percentage of world stock exchanges, mining companies are at historic lows on the eve of what is understood to be a boom in demand. So that's a very interesting theme here. That is echoed in all conversations, whether it's ESG or intergovernmental panels or what have you here at Mines and Money. And there's a lot of doom and gloom over the lack of capital in the sector, but there's also a feeling that these two divergent forces, an understanding, a well understood need for metals and a lack of capital, are going to come together at some point in the very near future. And we're going to see investors, big and small, turn around and move into the mining sector.
There's a huge disparity and a huge lag between the coming crunch for copper and everything related to energy metals and the investment in the area. And at some point, as you say, they do have to come together. And when that happens, you're going to pay more of a premium for the metal and perhaps the equities than what's available now, because I think we have seen significant lows in the market with regard to the equities. Not the copper price itself. It's remained somewhere between 360 and 380, which is definitely significant, but the equities themselves just don't reflect what's coming.
Yeah, I think that's fair. We're seeing equities having been beaten up over the last 24 months to the degree that companies like ours, we're trading at 4 to 5% of net asset value per share, and we're not alone in that. It's not going to take much to turn that around. It is felt that we are very near an inflection point. A few acquisitions, putting money back in investors' hands, some discoveries of the type that we've seen recently in dramatic movements in share prices. The movement in the price of metals, such as uranium, had a terrific move this year. Equity holders and uranium companies have been well rewarded for that. Gold is trading solidly over $2,000 an ounce now. So you can see those things are starting to happen that are going to cause investors to snap back to attention. And in many ways, a lot of those things are happening without realization. But a few more of those things, one more acquisition by a major that puts money back in the hands of investors, slightly higher move in gold prices. Gold is flirting with all-time highs. Once it hits there, you can expect to see it in the press. And so I see the makings for a turnaround in the sector in terms of equity valuations and investor participation in mining.
I know that Rio Tinto has been very active globally and more active, and they've invested in companies like Western Copper and Gold very significantly. I want to turn this conversation specifically to Mexico and Oroco right now. And you certainly have a very large project there in Sinaloa State. Have there been some courtships in the making?
This year, we've announced a mineral resource estimate back in May, 8.6 billion pounds of contained copper. We announced preliminary economic assessment results just a couple months ago, 107,000 tons of copper per annum for 20 years of mine life. That's $860 million per year of copper production. Relatively low capital intensity, low cost, low C1 cost per pound of production. So we've put on the table all those things that you would think would interest a major, and we're one of the very, very few companies with a resource of this size advanced to PEA stage. In fact, if I take all of the independently owned large copper assets listed on the TSX, listed on the ASX and the London Exchange, and you put together the potential annual production from those assets, that may equal slightly over, slightly under what is required each year for the next decade and a half to meet future needs. There is really a shortage of independently owned, large enough assets to move the dial for majors. I think that answers your question. There's a lot of potential interest out there. You mentioned Rio Tinto. Rio Tinto have been very open about their interest in M&A in order to meet future needs and grow copper production, and others. And there's very few of us that have deposits of the scale. When you've got a great many potential acquisitors and very few assets that meet their criteria, you can expect that those with those assets are getting attention from the majors.
I understand there were 4 copper mines that have been brought online within the last year or so. Has that changed the supply demand at all?
It has. There is a small slug of new mines coming online between last year and next year. That's going to come to an end. That process should be complete by the end of next year. The new production is probably the most significant amount of new production that we can expect between now and the end of this decade. Everything else that's on deck is significantly smaller. And there have been talks of surplus in the copper market, small surpluses, but surpluses nevertheless, until the end of next year. But the market is in such tight supply-demand balance that it doesn't take much to take that small surplus and turn it into a deficit. In the news recently is the Panamanian government's actions against Cobre Panama, as well as some disruptions of new production in Peru. And just those two things alone are enough to turn the conversation from projected surpluses to deficits. No, I don't think the new mines that are coming online, that have come online this year and will come online next year, are really going to affect the supply-demand balance and therefore copper prices. Copper prices have actually been quite robust. And when you're in a situation where delays to new production or a disruption to existing production, small delays or small disruptions are enough to turn the market back to deficit. I don't see a case where this new production is going to affect copper prices negatively. You also have things like copper demand in places like China. The reduction in demand in the Chinese property and building sector has been completely offset by the increase in demand from renewables and energy generation copper uses in those two sectors over the last year. So no, I think copper prices are going to remain where they are, which obviously not as high as the historical highs of $5, but they're very robust nevertheless. And once you see the new copper production that is going to come online between now and the end of next year, once we see that get absorbed, after that, it really is a quite barren landscape for new production. And we would expect renewables, decarbonization, focused copper consumption to continue apace. The other thing that's happening in the copper world is India increased its copper use by 30% last year. India is an emerging giant in terms of copper consumption. They have the potential to do what China did 15 years ago to copper demand, to greatly strip the supply. So we've got a couple of forces now that could lead to the next super cycle, but we've got a real barren landscape in terms of potential new production.
Some folks are saying I might be one of them that will see $5 copper within 16 to 18 months. Possibility in your opinion?
Oh, absolutely. Copper has on a number of occasions in the last 2 decades made those kinds of moves. And I think it is poised to do so again. So we could see a quite rapid turnaround in copper prices. And as mentioned before, we could also see a very rapid turnaround in the investment community's perspective on mining. So it's not going to take much to turn the ship around. There's a vast underinvestment in the mining sector right now, ahead of what is understood to be huge growth in demand for metals. So I think you've got the potential for copper prices to re-rate quite significantly and quite quickly, and a huge potential in the mining sector and the financial sector, how they perceive mining, and for funds to start to flow back into the mining sector. And that is, I would think, one of the overriding themes at this year's Mines and Money.
Adam, it's always great to see you. Thank you so much for chatting with me today in London. I look forward to our next adventure.
And Ellis, thank you very much for being a part of our outreach to investors. As we like to give people information, we like to help them understand the copper space, understand the metal space, and let them take that information, synthesize it, and make decisions and empower them as investors. And you've been a big part of helping us do that.
Thank you again, sir. I've been speaking with Adam Smith, co-founder and vice president of business development for Oroco Resource Corp. Oroco trades on the TSX Venture Exchange under the symbol OCO and in the U.S. on the OTCQB market under the ticker symbol ORRCF. Go to the company's website, ORRCorp.com. For Adam Smith and Oroco Resource Corp, I'm Ellis Martin.
Subscribe to the Ellis Martin newsletter. It's free. Go to ellismartinreport.com and fill out the quick and easy pop-up form.